You are listening to ChartingWealth.com's comprehensive review and forecast for the week beginning Monday, the 24th of April, 2017. We see that the stocks ended the markets down on Friday. Gold was up and the 20-year bonds were flat. Let's jump right in. I have taken the time, as I ask you to do when you listen to this comprehensive review and forecast, to fill out my weekly market worksheet. If you don't have one of those, you need to subscribe to our podcast at Charting Wealth. You will get a link in the show notes that actually links you to a PDF so you can have the daily market worksheet. It supercharges your training. I just filled it out in order to do this broadcast, and I'm telling you, it always surprises me how much I learn when I put pen to paper, look at these charts, and jot down what's going on. There is no better, faster way to improve the quality of your chart reading, which then gives you the ability to forecast or really trend follow on these charts. And when you master this, to make lots and lots and lots of money as a stock trader and or investor. Now, we're not anything but an education firm. We're not a stock calling service. We want you to practice with us. When you get good, you can make up your own decision, your own mind with your own money. Let's jump right into what we see going on with SPY on our weekly chart. We see that as far as the PPO goes, it is continuing to move down. Of course, we had our weekly vertical crossover going down back on the 31st of March. We had, for a few weeks before, we had the two-day chart crossover going down, but it didn't get enough energy to pull that weekly chart over until the 31st, and we have continued down movement. We see that things are moving down, not quite as strong as the week before on the PPO, but continued down movement. We see increasing downward momentum in our DO, the derivative oscillator. As far as our candlesticks go, we have what looks very much like a spinning top. It has equal wicks on the top and bottom. Of course, that means some uncertainty. The market's still trying to get its legs to really keep spiraling down, but so far it has continued that down movement. And since our jumping in point, of course, it has been nice for those of us who jumped in after that down week at the beginning of the week after, the week that ended on the 7th. We saw a jumping in point 10:30 a.m. on that Monday. Now let's talk about what's going on with the trend line. Prices below the weekly and the two-day trend lines, which is what we like to see in down moves that we have been trend following. And as far as just the comments go that I filled out on my daily market worksheet, I put in downward momentum continuing. Keep an eye on the two-day chart. And let's go to the two-day chart and just look at what we see there. Uncertainty comes from the last three green up candles. And they have been up. Huge wick on almost twice the size of the green open box candle that occurred in the last 2 days. But what happened was, even with that upward momentum, it was squashed down by the bears, so closed below the two-day and the weekly trend lines. We do see that the derivative oscillators continuing to lose energy and the PPOs flattening out. So again, it just bears watching over the course of the next week. That's where we are as far as our weekly comprehensive review goes on the S&P 500. Keep watching it, still in confirmed down moves. Going back to the weekly chart, going over to the Qs. What do we see going on in the Qs? Well, as far as our PPO goes, it is weak, but still continuing down. In other words, it's not rocketing down, but it has broadened since it crossed over. And of course, it crossed over when? On 4/13/17. That was last Friday. Again, not the Friday the 21st when we're doing this broadcast for you for Monday the 24th, but that prior Friday, Thursday the 13th. Remember, markets weren't open on Good Friday. So what do we see going on? Well, we see that the DO did flip. That is the derivative oscillator, and we like to see that. It flipped over right as the price percent oscillator flipped over, so that is a good sign. As far as our candles go, we have a green spinning top, almost a doji as we bore into it, focus in on it. It is a green open box spinning top, and when we look at it, we can see that there's a little bit longer wick on the top. And of course, the price was down on Friday. That's what made that wick longer. So prices did close down on Friday. And as far as the trend line goes, we don't have a weekly trend line. We do, though, see on our, if we go to our 2-day chart, we can see that the price is above the 2-day trend line. So that gives us some concern. When we look at the comments that I noted down, I know that we have 3 prior 2-day up candles starting on the 17th. Now we still haven't had the PPO crossover going up. We do note that the last green candle, an open box with a half size on top, the wick is about half the size of the candle itself, and that's with the last 2-day candle. And we see that the PPO is parallel, so it's running parallel. And we see the derivative oscillator, although still very negative, is losing downward momentum. It had gained downward momentum until the 2-day candle ending on the 19th, but that last 2-day candle on the 21st has lost momentum. So what we take from all of this is it bears watching. Pay attention as the week starts out on where this 2-day chart is. Remember, the weekly chart is still good for us, but pay attention to that 2-day chart. If it rotates over going up, you may very well want to get out of a down play and wait for the 2-day chart to rotate back over going down so you can properly enter again for a winning trade on the weekly down move that we have already there on the chart on the cues if we do have a crossover going up on the 2-day. So just pay attention to that as we jump into the week. Now let's go on to bonds. Again, we said bonds were flat for the day on Friday. What do we see happening? Well, of course, in bonds, we had our weekly vertical crossover going up back on the 2nd of February, all the way back on the 2nd of February, 2017. When we look at the PPO, we see, of course, that it is up, and it is a little bit weaker than the prior week. We see on the derivative oscillator, of course, that it is stronger than the prior week. And when we look at our candlesticks, we see, of course, green open box with an upper wick, and it is actually considerably bigger than the prior week. So we had lots of good price movement up. As far as our trend line goes, we're above the weekly trend line and the 2-day trend lines. That is always a good sign. And as far as our comments go, and we're going to drop back and take a look at the 2-day chart, we see that the last 2-day candle has actually lost energy, weakened considerably, still above the 2-day trend line, of course, well above the weekly trend line. But we have a red open box candle with a larger wick on top than on the bottom. So in other words, the bulls pulled the energy up, but the bears were able to drive it down pretty significantly. And we've just basically seen a sideways slide in price movement. The PPO, the price percent oscillator, and the derivative oscillator have been losing energy as far as the 2-day chart goes. But again, still good up movement. Just sort of pay attention to that 2-day chart, see how the week starts off and what's really going on as far as that 2-day candle goes. Remember, still have strong up movement on the weekly chart, which is, of course, our big, most powerful chart as far as the Treasury bonds 20-year fund goes. So let's move on to our last chart, and it is gold. What do we see going on with gold? Well, of course, gold crossed over going up all the way back on January 27, 2017. Went up for a while, dropped off for a couple of weeks, And then about the time we saw the 2-day vertical crossover occur back on the 24th of March, gold has been going up for 5 weeks. In fact, this last candlestick is quite powerful in up movement as far as gold goes. PPO is continuing to spike in up energy. We see that happening. It's moved up a little strong, well, about the same as the prior week. We see that the DO, the derivative oscillator, has also been gaining energy. And when we look at the candlesticks, of course, it's our 5th green candlestick. It is the biggest yet over the course of the last week. That is good to see. And on the trend lines, we're above the weekly trend lines. Now, as far as comments go, let's take a look at the 2-day chart. And we see that over the last two-day candles, we've had a sideways slide with red open box candles. This last candlestick that ended on Friday the 21st is a spinning top, again a larger wick on top than the wick on the bottom. But we are seeing the candlesticks weaken and slide sideways. The derivative oscillator has been losing energy since it topped on the 2-day candle ending on the 17th. So again, paying attention to that. But again, we see the PPO has continued to actually gain energy. It was weaker the 2-day candle before, so it gained some energy on Friday. Now, if we delve into that, remember that 4-hour chart, how much we like it on gold? Well, it crossed over going down back on the afternoon of the Wednesday the 19th and has been going down since then. But we look at price movement, it bottomed out at 4 p.m. on Thursday and started moving up actually on Friday. And as we said, it was up 0.29%. So continue to keep an eye. This 4-hour chart is quite prescient for us, so pay attention to that. Remember that our biggest chart of all, the weekly, is continuing to spike up quite nicely, and the 2-day chart is sliding sideways. So just keep an eye on that as we jump into the new week. That's where we are. And again, utilizing that weekly market worksheet, we really urge you to fill that out on the weekends and, of course, the daily market worksheet during the week. You have questions, problems, concerns, we are happy to help you address those at Charting Wealth. Just go to the website. You can, of course, always email us, cw@chartingwealth.com. And if you would like to email us directly from the site, just go to Contact Us. Please make sure that you sign up for our newsletter. We send out our weekly comprehensive review and forecast usually on Fridays. Get that out to you over the weekend. And of course, our daily reviews are sent out every day to our emails. All you have to do is go there, put in your first name, your email address. We never spam those. We never sell our emails, nor the folks who sign up for our weekly vertical crossover notifications. You can do that on your cell phone by texting to the number 33222. You text the word Charting Wealth, and we'll put you on that list. Please make sure that you also subscribe to our YouTube channel, and we're also on Facebook, Twitter, Instagram. We just appreciate you being with us. If you want to really help us out, go to iTunes, subscribe to our Charting Wealth podcast there. We actually have 2. We have a video one of the weekly review and forecast, and we also have our daily. Either one of those, please sign up, or for both of them. And of course, give us a wonderful 5-star rating. Thank you so much for being with us. Let us hear from you. God bless. Hope you have a great week practicing your virtual trades from chartingwealth.com.